But typically I'll track that as well because last year that's all I did. The media can make a great company bad and a bad company good. I tracked the media all throughout last year, whether it was Johnson & Johnson, Clorox, Moderna, Kodak, the cruise line industry, travel industry, Delta, oil and gas industry. Just kind of look at what they say and do the opposite, really. Welcome back, YouTube. So there's been a lot of information looming over the markets right now pertaining to inflation and whether or not there's going to be a correction or is this just a sell-off, and the effect that the Delta variant is going to have on the market. So today I'm going to discuss inflation, kind of like why we're seeing that and the areas we're seeing it in, as well as whether or not I think the Delta variant is playing a role, and also where I think the market is heading. So we've been having inflation for just about month over month for this entire year of 2021. And I'm going to start the video out by saying that I do think that the Delta variant is more of a convenient excuse than as far as for what's happening in the market versus what the underlying issues are. And it can play a very small role, but I don't believe that it's a major factor at this point. So the fact of the matter is we are at roughly about a 13-year high for inflation, and just year over year, we're about 5%. So just about everything right now is 5% more expensive than it was last year at this time. So why the certain surge in inflation? Well, last year during the pandemic, it was raining money and it was so many government handouts and relief programs and everything from financial assistance on a monthly basis all the way down to like housing costs, and pretty much that money just oversaturates the market. So the more of something there is, the less it's worth, in particular our dollar. When we see a rise in inflation, we typically see people gravitate toward hard assets, so something typically that outpaces inflation or at least maintains its value. So typically you'll see a gravitation towards precious metals or real estate, or even stocks in some cases, because the dollar is not going to do anything besides lose value. So you're typically going to invest in really good companies that are going to either pay dividends to outpace inflation, or that you feel will appreciate in value during that period of time that we have high inflation. And that last part about investing in stocks during inflation, I know that's kind of counterintuitive, but we're going to talk about that a little later. So the inflation is mostly affecting big ticket items. So like real estate, the travel industry, car rental businesses, and typically you can see like the trickle down effect as far as for it being related to gas prices increasing, the increased supply, the decrease in supply and the increase in demand as far as for people buying houses. And we saw the recent surge in lumber, which also ultimately affected the price of housing. And typically what this is going to happen is for two reasons. So when some people were able to continue working throughout the pandemic, and some of them, they weren't able to work, but they were also being able to get like government subsidies. And so that they were able to continue, getting money and buying food. And also we saw all the forbearance in like the rental industry, the mortgage industry, the student loan industry. And so people were still able to get money, but everything was closed, so they couldn't spend properly. So what we're in now is a very unique time that everyone wants to go outside, everyone wants to travel, and we also have everyone having a surplus of cash. Most people right now have more cash than they did pre the pandemic. And also we have a diluted cash supply. So technically we're having people with more cash able to spend. And we're also dealing with the fact that we just had a large amount of cash that just flood our markets. So we're dealing with both of these at the same time. A good example of this is, if you've been following my channel for a while, I made a series of videos about the car rental company Hertz last year as they were going through like the bankruptcy process. So when the economy shut down, Hertz, for example, they got rid of some of their cars because it was just, their fleet, it didn't make sense as far as to keep that overhead cost if they weren't going to be able to rent them out. So, and they also needed some extra cash, so they sold their cars. This put a lot of used cars as far as on the market. However, now that things are opening back up, they don't have the fleet to support the demand that they're having. So they're ultimately raising the prices because they don't have the fleet to meet the current demand. And you'll see like fuel prices are higher, so you're going to pay more for air travel. The demand on hotels are higher, so you're going to see a spike there as well, and so on. Earlier this week, we had the Dow drop by about 900 points, a little over a 2% drop, and everyone was blaming it on the Delta variant, and where there was some reports we're headed toward hyperinflation, and there's no indicators that, especially the hyperinflation, there's no indicators just yet that say that we're going to head into hyperinflation, and I do believe the Delta variant is just a convenient excuse. So we have to talk about why the 2% pull off, and what does the inflation has to do with it. And we also have to stop playing with the words like correction and sell-off, because there's a difference between the two. Now, a correction is typically going to be 10% or more. 2% is not significant in any market. I don't consider that anything to be fearful of. And in my opinion, this is just simply investors taking profit. There's a lot of uncertainty going forward as far as for the market and what's going to happen once these government programs and the cash stops flowing out. You know, we don't have people returning back to work like normal. So there's a lot of uncertainty in the market. And typically when you have uncertainty and investors are in the green, typically they're going to take profits while they can. Because when there's uncertainty and there's fear driving the market, typically that does cause for pullbacks that eventually lead into like corrections if there's like a surplus of money in there. So before that, typically you'll see investors take profits, which is what I believe happened earlier this week. I don't believe that was a correction. Even by textbook definition, that wasn't a correction. I believe that was simply investors doing it. It was pretty much categorized as a sell-off or investors taking profit. Now, according to the Wall Street Journal, they do believe that inflation will get under control once the surplus and savings account goes down, and the government programs, once those continue to recede back. They do believe that the inflation will go to a more normal level and we won't see the month over month. And they do believe that this will happen later this year, actually. As far as for what I'm doing, right now I'm not aggressively pursuing any positions, but I am waiting, because I do like to see a pullback of around like 8% at least before I start being aggressive as far as like with investments. Now, as far as for is the Wall Street Journal correct, or is their analysis correct as far as for us getting inflation under control? That's hard to say. There's no, like, you can't chart the media. The media is the most powerful variable when it comes to markets and conditions as far as for fear or versus greed. So there's no telling where we're going to be by the end of the year, but I am watching very closely. If this Delta variant, or if it continues making headlines, it can very well increase the fear in the market and lead us to further sell-offs, which can also push us into that correction category of 10% or more, or we can even get hit harder than that. So it's kind of hard to gauge it, but typically I become more interested as we get around the 8% range, not the 2% that we were seeing earlier this week. That's pretty much what I did all last year, which was as the market had those corrections and those pullbacks, and everyone was selling off, buy the fear, sell the greed. And if I get another opportunity to do that this year, I certainly will. The media can certainly swing markets with their reports, but typically I'll track that as well, because last year that's all I did. The media can make a great company bad and a bad company good. I tracked the media all throughout last year, whether it was Johnson & Johnson, Clorox, Moderna, Kodak, the cruise line industry, travel industry, Delta, oil and gas industry. Just kind of look at what they say and do the opposite, really. That is my take. I hope you found value in the video. Please like and subscribe. I appreciate all of you. And if you're looking for a brokerage, I do recommend Webull. I have a link in the description. And now through the end of July, if you open with just $5, you can get 2 free stocks up to $2,000 in value. I'll also post a link to my social media, Instagram, Twitter, in my description box as well. I'll post it on the screen here if it's more convenient for you. I appreciate all of you. Please subscribe if you haven't. We're pushing toward 50K. I appreciate that. We've seen tremendous growth this year, so I'm really excited that you guys are loving the channel. Thank you, and until next time.